Hello everybody, thanks Giselle Jackson, CPA here with a video for you in regards to retirement plans and retirement planning for individuals and business owners, okay? So a lot of good information is going to be in this video. Stay tuned. We'll get started here in a second. All right, everybody, thanks for listening in today. Today we're going to talk about what it is, good ideals on retirement planning, okay? So there's a couple different ways you could do retirement planning, okay? You could do individual retirement planning, commonly referred to as IRAs, or you can do business retirement planning, which there's multiple options that are there, but the two favorite options that I have for businesses are solo 401ks and SEP IRAs. The most favorite will be the solo 401k, okay? So nice advantages that you can take advantage of by doing both of those items. So let's first talk about the individuals. For individuals, you have until April 15th normally to make an IRA contribution to either traditional IRA, non-deductible IRA, or Roth IRA, okay? Now, which one should you do? My recommendation, generally speaking, especially if you're in the lower income brackets, is going to be to do a Roth IRA, okay? But even if you're in the higher income brackets, I would still recommend a Roth IRA. Why? Because you probably are not eligible to contribute to a traditional IRA and get a tax deduction. So I definitely recommend Roth IRAs, and there is no income limit on a Roth IRA. The only limit is on going in what we call the front door, okay? So if you want to just contribute directly into a Roth IRA, then you have to be under a certain income limit, okay? But if you want to still contribute, even if you're over that income limit, then what you can do is make a non-deductible contribution to your traditional IRA and then convert that over to Roth IRA dollars, okay? And there's no taxes involved with the conversion as long as you do it before you start making earnings and you do not have any other traditional IRA dollars that are pre-tax, like SEP IRAs, traditional IRAs, simple IRAs, any other pre-tax IRA dollars, okay? So you can easily convert those dollars over to Roth and start, profiting off of that. Now, why do you want to have a Roth IRA versus the other one? Okay, so think about it this way. If you have a Roth IRA, let's say, just for example, let's say you put $10,000 into a Roth IRA over a few years time frame, okay? And let's say over the next 20 years, that $10,000, turns into $150,000. So with maybe an average rate of 10% a year or something like that you might receive in exchange for that, okay? So would you rather pay taxes on the $10,000 or would you want to pay taxes on the $140,000 of profit that you made, okay? That's what you want to get into your mind and what you want to think about. It's always going to be better, I shouldn't say always, but usually it's going to be better, 9 times out of 10, to pay the taxes on the money ahead of time and to have that tax-free growth inside of your Roth. And we haven't even gotten into the whole self-directed strategy, which we're going to talk about in another video, where you can really multiply those earnings 10, 20, 30 times over by doing certain strategies and doing certain things. So having a Roth IRA is super powerful. The other advantage to the Roth IRA, you can always take a tax deduction, withdrawal. You can always take a withdrawal from the Roth IRA without penalty, without taxes, for your contributions that you put into the Roth IRA, okay? So if you put money into the Roth IRA, any contributions you put in, for example, the $10,000 in my example that I talked about earlier, you'd be able to pull that out in an event of emergency, okay? So if you have money sitting in a savings account, what would you think would make sense? Maybe to put the money into the Roth IRA and let that grow a little bit, and then worst case, if you actually needed to go and take that savings and use it for an emergency purpose or something like that, guess what? You can pull it out no tax, no penalty, and use it for that purpose. Hopefully you don't ever have to do that. Hopefully it's just sitting there continuing to grow, but it's always an option. Now, you can't ever put more into the Roth IRA than what you normally can, but you can always pull it out if you need to. So that's why I usually recommend contribute to the Roth, make that your glorified savings account. It's a great strategy, okay? Now for business owners, what are your options? Here's your options. So you can do a SEP IRA, which I don't really like, but it's a nice thing to do sometimes when you just need to get some money into there and do some savings. You can contribute up to 25% of your W-2 income if you're a corporation, or 20% of your Schedule C net profit if you are a Schedule C filer, okay? So those are your two options that you have for the SEP IRA. Again, I don't really like it because it doesn't give you the opportunity to put as much as possible away. And so what I prefer typically is going to be a solo 401k, all right? And also the SEP IRA, by the way, messes with your Roth IRA strategy if you make too much money in terms of doing the backdoor Roth strategy, okay? So that's why I don't really like the SEP IRAs. I usually recommend solo 401ks. Okay, so here's what you want to do with solo 401k. The nice thing about that is you can do $19,500 per year as an employee, okay, as a contribution to your solo 401k. That can be Roth 401k dollars. It can be traditional 401k dollars, meaning it's pre-tax. So you have two options there, all right? Now, on top of that, here's the kicker with 401ks. You can also make non-voluntary after-tax contributions, okay, to your 401k account. And you can then convert those to Roth IRA dollars. Isn't that sweet? All right. So now you have more than $6,000. So normally the limit for Roth IRAs is $6,000. Now you have more than $6,000 you can put into that Roth IRA by doing this conversion, which is pretty sweet. Which is why, doing a solo 401k when you're, owner-only business or you don't have any full-time employees definitely makes a lot of sense. And so that's usually going to be the strategy of what's going to help the business owners out the most and what will typically save you the most money, while also allowing you to kind of build some wealth and put some money into some tax-deferred accounts. Now, the thing I always hear is, why would I want to put money into a retirement account that I can't access? Okay, well, I already told you there's one fallacy there with the Roth IRAs. You can't access that. You can always pull out your contributions, okay? Now, the other fallacy is that you can't ever access your money, okay? Yes, you can, all right? So you can access it in a couple ways. For 401ks, you can do a loan, okay? You do up to $50,000 of your 401k balance, or 50%, whichever is higher. Whichever is lower, excuse me. So you can do up to $50,000 or 50%, whichever is lower for your 401k balance, okay? So you can do that as a loan within your solo 401k. So that's $50,000 you can get access to, all right? In addition, what you could do is, if let's say you have an investment you want to invest in, you can actually use that in retirement account to invest in that investment. And the nice thing about that is, when you do that, you're not paying taxes on any gains from those investments. So we're going to get more into that. That's called self-directing your IRA or your 401k or your retirement accounts. We're definitely going to get into more of that, but I just wanted to kind of touch on that a little bit. You can access the money without significant penalties. Okay, there's certain ways that you can do it. You just have to do it in a smart manner and work with someone that can help you kind of do that. So, but at the end of the day, you're ultimately saving yourself money on taxes by doing some pre-tax contributions in some cases, or by having that tax-free growth in your after-tax accounts, like your Roth IRA, your Roth 401k, etc. It's up to you to decide what's more important, tax savings now or tax savings later. But I can tell you, my advice typically is going to be tax savings later. It's going to be more beneficial to you in the long run, okay? So hopefully that helps you to understand kind of some of the perspectives and thoughts that I have on retirement planning. There's a lot of great tools and advantages out there for doing retirement planning. So highly recommend you take a look at those options, and let me know if you have any questions. Feel free to comment, share, all that good stuff, subscribe, like, all those great things. We are trying to get the word out and to really try to help people build generational wealth, to get financial freedom, to bridge the wealth gap that's in this country. We want to do what we can to help you get there. So if you have any questions, please let us know. I apologize if it takes us a while to get back to you sometimes. We are really, really busy right now, as you can imagine, but some of this information is really important, and I just wanted to get that out. And just as a final reminder, if you want to do Roth IRA contribution or a traditional IRA contribution or a backdoor Roth IRA contribution, you have to do that by May 17th this year is the deadline that you have to do that by. The IRS hasn't officially said that, but statutorily, whenever the due date is extended, then typically the due date for IRA contributions, HSA contributions, etc. are also extended. So if you want to be safe, April 15th will probably be the date you want to get it in by, but you should be able to do it through May 17th. Okay, so hopefully everybody found this video helpful, and we will talk to you later.